Hello. Mic test. Hello. Hello, guys, and welcome to our 148th edition of the Trading Opportunities webinar. And before we continue with the actual webinar, let me just give you a very quick rundown of our current webinar. Thank you for the confirmation there, Manuel. And a little bit of introduction about these webinar series and about my work. So my name is Nirav. I've been doing these webinar series weekly for quite some time right now, and we generally do these every Friday. Last one was a holiday as announced in 147th, so we skipped last Friday, and today we are back again in the new year with our first webinar. As for the past webinars, we have in the last 146 webinars captured a total of 368 trades. I believe this brings our average quite high. There was one thing we checked here. Let me see. Yes. So here is the weekly performance or yearly performance of this weekly webinar series, I must say. Last year in 2024, we conducted 52 weekly webinars and 172 trades were discussed live in front of you and brought our average to 3.3 trades per webinar. This was all for free, obviously, and anybody can watch this. No requirement to enter our private Slack channel or a paid subscription or anything. Right. So this was our weekly performance. I hope many of our viewers have benefited. If you are one of them, do let our subscribers know by typing in the live chat or later on in the comments. And before we proceed with this series anymore, just do keep in mind that our views have certainly not crossed the 1,000 mark, which was our estimated target. So I would appreciate if you guys become a little bit more serious in regards to your sharing, and if you have any particular ideas, do let me know, because otherwise I am considering downsizing these webinars a little bit in the coming sessions. Anyways, that's it for our yearly performance. And moving forward, I'd like to give you a quick introduction about the other things I do. I am also the author of the video course Complete Guide to Professional Trading with Elliott Wave, which has 1,600 students. And I also am the author of the book Think with the Markets, which is available on Amazon's Kindle electronic delivery platform. So you can have it in an instant electronically delivered to you if you are interested in reading it. This is specifically focused towards intermediate to advanced traders, and the video course is more focused towards beginner to intermediate traders. And the way we conduct these webinars, before that we used to conduct a monthly series and also have video uploads on a regular basis, for which we have kept a track record, which you can see stands above 80% with a 6-year consistent accuracy. And I really do need to update the weekly webinar numbers here. Anyways, that's about it for my introduction about the past work. And coming back to the actual current discussion, we'll be discussing the charts of euro, followed by crude oil, gold, S&P, Nifty, and in the end, we'll discuss the chart of BTC or Bitcoin. Right. With that being said, we will like to now move ahead and start the actual discussion. Every time we discuss a chart, first we will have a look at what we said in the last webinar, and then we will move over to the current webinar to see the live chart. So let's just head over to our last discussion of Euro USD and see what was being discussed. Webinar number 147 conducted on 27th of December 2024. Let's see what was the take on Euro. I'd like to just play the video from here and speed it up. So in this last discussion, I guess the quality is so bad. Let's just push it to 1080p. So in case you are watching this later as a recording, make sure you have turned the quality to 1080p. So yes, in the last discussion, we had the idea that this market is continuing inside a wave 4 of an impulsive progression. And Let me check the, yes. So in the wave 4, either the 4 will continue, have one more down leg remaining, or the 4 is complete and the 5th is complete and it will just go up. So we had targets, not targets, I should say, levels 1.062. If it crosses above it and sustains above it, we were assuming that this correction is complete. If not, then below 1.033, we will look for short setup. So that was the main idea from our last discussion. Let's now head over to our actual current live chart. So first of all, let's see what's the take right now, if there's anything changed in regards to the analysis. So currently we are assuming that this wave 4 is still here. So we are still following the impulse down count. Let me just start off by giving you an idea. So we have the point of reference price around 1.12 roughly speaking, and then we have this structure down, an impulsive progression in the downward direction. We are assuming the 4th is possibly here. Could be taken at one other location, but nevertheless, it gives us the same analysis or same outcome. Now, if the 4th is known, then we also know that once the 4th is complete, we expect a move which should take out the low. This was actually the basis for a scalp trade, which I missed out. As a matter of fact, I can take minor scalps here, but the idea remains that once the 4 is complete here, we want to see a leg which takes out the low of wave 3. In this case, the low of wave 3 is around 1.022, and as you can see, the low of wave 3 has been taken out. So this idea we captured in live market, although I was not able to actually take this trade. So I'll just show you the idea as we discussed it. Here it is. We'll look to scalp short below 1.02487. That was the idea. And here is the chart. One second. I can remove all this. Yeah, there is a chart. And the market was trading at that time around 1.03101. And the idea was very simply that we look for some scalp shorts, quick entries, bigger positions, and hopefully make something out. Although I later realized that this down leg was a little bit too fast for me to allow entry, and I generally do not enter with limit orders. So I was off screen and couldn't catch the move. Although, let's see what now we can do with this setup. So given the fact that we are assuming it's a fourth wave, the fourth wave is complete, we are now left with the idea that fifth leg down will have 5 waves inside of it. Yeah, there it is heading down for the fifth leg. So hence, we can consider this as our new point of reference. The price level is roughly around 1.04480, and then we can assume already traversing within the fifth leg. Right, so that basically means we can at this point assume that we are in the last of the last move. Of course, it can follow through and give a deeper movement. However, at this point, we cannot expect too much out of this market. I can take some scalps here. The stop loss will be huge, 1.0277. Let's see it. And the target will be a little bit below 1.0214. So it will be most likely 1:1 or inverted risk to reward, as you can see over here. Right, so it's not even 1:1. So hence, I'll think about it if I do see some pullback here, some sideways range formation, although I doubt it's a good idea at this point. Anyways, long story short, we have a minor scalp short position here, but more importantly, I want to reiterate on the idea that once this down leg is complete in the 5 wave impulse down structure, we can then look for a upside scenario. So that's the major idea here. Once this fifth is complete, that's what we want to focus from a swing perspective. This is a scalp trade for right now. which I'll consider. I'm not really very serious about it anyways. So anyways, the idea then becomes once it takes out the trend line, the 2-4 trend line, we then expect a pullback. If we get one possibly testing the trend line itself, then we expect this kind of movement, at least an ABC movement, A here, B here, and C here. So that's the main tick. Wait for the wave 5 to complete. If we get a confirmation they are good enough. If not, then we wait for the channel to break to the upside. If the channel breaks to the upside, then we look for a long setup. That's about it for my take on euro from a swing perspective. And I have also clarified my idea from a scalp perspective, short term downside. And to conclude the scalp idea, if the 2-4 trend line, everything is perfect, then if the wave 5 completes completely to the downside of the channel, then we have a target coming around 1 exactly parity. So that's a huge target. I'm not saying it's going to hold, but generally the idea in this Elliott wave analysis is that fifth waves do have the tendency to go to the downside of the channel. Not always, but if they do, it's giving us an level of 1 literally. That's about it for our take on euro. And before I move forward, I'll have to check the comments. I have ignored them for far too long. Manuel has confirmed about the microphone. Thank you, Manuel, and hello, Muhammad. Good evening, Ativat, one of our members from our Select private group. Hello, Dawood, and good morning to you, Luis. And yes, of course, guys, a very happy 2025 to all of our regular viewers and non-regular viewers as well. Kind of forgot that one. Okay, so guys, that's about it for our take on euro. If you have any doubts or questions, just push them in the live chat. While I'll now head over to the chart of gold. Why gold? Crude oil. So here we are on the chart of crude oil. The discussion is from our last webinar. I would like to just take a quick glimpse at it before we head over and discuss the current market chart. In the last discussion on crude oil, our idea was that this market is possibly propagating either in a sideways triangle or a flat kind of correction. In a triangle, we expect this market to hold these trend lines, upside trend line, downside trend line, as you can see. And in the case of a flat, it can just propagate within this box range and take the entirety of the, go to the entirety of this range, just the upside or the downside anyways. That was the idea. And I had some shorts, which I had been carrying forward with the idea of the triangle count for actually quite a long time. So here is the chart, live chart of crude oil now. And I have today closed out those shorts somewhere here, 75, 70s or 40s, something somewhere in the middle of this level. And the reason is pretty simple, that if we were assuming this as our main count, then we really wanted this trend line to hold. And as you can see, this market has already taken out the trend line. It is not unusual for wave E to test that. It can do that every now and then, but it is the way it has done with this super strength that I'm assuming that it's not really playing out as expected. So I have closed out those longs with shorts which I have carried for quite some time now and booked the losses. So now the idea comes down to what is this market really doing. So as we have already noticed that all of this range can work out for this flat structure, that is, this market can simply go and test the upside, go and test the downside, and then propagate within this range and then go down is now valid. It is literally what's playing out. So in this case, if we are to assume that the B may be here or here somewhere, That just gives us a very quick idea that anything above 79.152 can be taken as a quick scalp long opportunity. But we really have to analyze this from the bottom to the upside. We can't just say quick scalp opportunity because we don't really know where the B way may land. Although the idea is it can go to the upside, it does not really always have to, right? And at this point, I have not really analyzed it in quite detail, but I like to throw some quick ideas around for once. In a flat, we can assume very simply that we have three waves down for the A leg, three waves up for the B, and possibly five down for the C if we get a flat. Otherwise, it could also become complex or whatever. So in this case, we have the, actually, I should have drawn it invertedly. In this case, we have the A complete over here, and B is what we are assuming complete over here, or it could also be assumed to form a triangle pattern which can be considered complete over here, in which case this leg then becomes the C wave propagating to the upside. So anyways, if we were to assume that, let's see which one is better. I guess both can be counted. It can even be assumed here, considering this as a possible corrective structure, which ended here. Anyways, once the B is complete, we are then assuming that the C is in play, and this is 1, 2, 3, 4, 5. So perhaps the C is complete. Perhaps this is just the wave 1 of the C, which will be followed by 2 of the C, and which will then be followed by 3 of the C. We don't have clarity for that. It only is something we will have to wait and watch from here. Right. So now the idea becomes that either we are seeing a continuation of the 5 waves for the C, or the 5 waves are already complete here, or we will see a down loop like from there. So it becomes a wait and watch kind of scenario here. Even if we see a correction here, it could just mean that we are seeing a wave 2 of the wave C, basically this leg from our rough count. So hence crude oil is a little bit of a wait and watch. However, we have some very simple and clear ideas which we can use for both our swing plays as well as short-term scalp kind of plays. So from scalp perspective, we will look for some correction to the downside, and if the correction is clear enough, if we get the A wave as clear enough, then we can wait for the B for taking some short trades for the C leg down for this wave dot 2. If things are not very clear, we can let it play out and then wait for this high to break and possibly take some longs for the wave dot 3 of the C. So these are the two plays, two, three different kind of plays which we can think of at this point in time. And this is the daily chart. I'll probably discuss it in better detail in our coming sessions, or just post more clear discussions in the Slack private group. But I think I've given a pretty clear picture of what I think might happen from here on. Again, if you guys have doubts or questions on this counter, you can just push them in the live chat. So that's about it for our take on WTI's crude oil. And with that, let's now head over to our next discussion, which is S&P's. No S&P's. Gold, of course. So let's head over to our discussion for gold. I don't see any questions here, so I'm assuming everything is audible and clear enough to our viewers who are live. If there is any issue, you can just let me know in the live chat. So here, let's have a quick look at what we discussed in our last webinar on gold. Let's allow the chart to load up for a bit. And here we are with our discussion from 27th of last year, December. And what are we discussing here? We are assuming that gold is possibly forming a ABC kind of structure where the B leg is possibly complete and the C can head lower. That was one of the main ideas here. Let me just see if there is something else discussed. So our short entry was 2586 was the entry level which we wanted to actually 2586 is risky one, 2540 is conservative one. I believe that's what our H1 is suggesting. Let's see if there is something else discussed here before we move over to our current chart. I don't see much of anything else. Yeah, so that was the main idea. Short setup with the entry levels 2540 and riskier one 2586. Right, now let's head over to our actual chart and see how things actually propagated. So here is the actual chart for gold. We have WXY kind of progression happening here. So let's see everything from this point of reference. Point of reference is around 2786. We are assuming that this is the W and assuming that this is the X complete here possibly or continuing sideways as here, right? Oh, 1 second. Yeah, that should do. Or I'll just delete it. So that was the idea from our last discussion. W down, X sideways, possibly here or continuing and then down. That was the main idea. Now, as you can see, none of our downside targets did get downside levels did get triggered. I'll just like to quickly show by checking from the last webinar 2586 2540. We can just minimize it now. And here on the live chart after 27th December, let's see 2586 is not triggered. And of course, if 2586 is not triggered, then how else will anything else get triggered? L is less than 82. So anyways, our downside targets never got triggered. Our short setups were never initiated, and hence there was no real reason for getting into a serious short position. So if that was the case, then what really is happening here? What's the current outlook? Let's now discuss. So first of all, I'm assuming that the X is continuing here. So I'm assuming that this X is not here, but is possibly continuing here with this being the wave A of the X. Again, that's just my assumption. It's a complex count, so it can have multiple variations of itself. I'm not interested in discussing too many variations, but you will get the gist of what I'm saying here, and this will be dot C, which will complete the X structure. And once this X is complete, we can then assume that we will have a corrective structure in the downside direction. Anyways, not getting too much interested in the after kind of thing, but more in the now thing. So right now the setup becomes that if the B is complete here, that means upside should follow, and that means we have I think I've taken this as a diagonal structure, and then the correction following is yes, that's how I'm taking it. And dot 2 here, and we are then continuing up for the dot 3. There will be a dot 4, dot 5 that will complete over C, which will complete the X. All right. So that's the assumed count on gold. And as a matter of fact, we were able to capture this long opportunity. Scalp longs I had played from, I don't exactly know the level on the top of from the top of my head. So what I'll do is I'll just show you the actual trades which we have taken. So on the left, you can see here that we have, let's see. Let's see where the long entry is. Here it is, looks to be continuing before flat. Updated looks to be continuing as a flat structure. Added longs. So here's the live trade from our private Slack group. We have taken long trades at 2660. Let's just type that in. After that, we have added some more longs. Let's see the price level for it. 2665. Let's assume, although it is a little bit less than that. And the target we are expecting is 2674. Target minimum book profits 50% position close as 2674 was achieved. As you can see, auto closed because we had profit level already marked there. So we closed 50% here. Target achieved at 2674. 14 points if we consider the initial entries, and roughly 10 points if we consider the second entries. Later position booked profits on longs, all profits closed as target to 2677 was hit. We had some more targets above it, but I decided to close everything around 2677. So roughly 15 to 14 to 16, 17 point something we caught on this quick scalp trade, which was taken and posted live in our Slack group yesterday. Just a live example of the ideas which we generally track and trade. Now here, coming back to the actual chart, what we do have here at this point in time is expectation for more upside, with the idea that the current progression is heading into the wave 3, and once this wave 3 is in play, we will then have one more leg up. So basically, long story short is that we have two legs remaining is the main idea. I think we have some question or comments here. Let's just check that before we conclude this analysis. Do you think wave.c will surpass .a? Well, yes, Jeffrey, that is one of the main thought processes here, that wave.c is most likely going to surpass it because we have two legs to the upside remaining. So I believe at least it will test the high, and in best case scenario, even pass it around 27, 20 something. And what is this other level? 2730. So around 2720, 2730, we are definitely expecting that this market should at least test. So even if the 3 is here, the 4, let me just change the color. So even if the 3 ends here, the 4 is here, we still expect the 5th to at least test these levels. 2720 and 2730. Let's see what other questions we have. Okay, Dal, Etivet, phone Dal, and one of our Slack group members was also in trade with me. That's good. That's good to know. All right, and that was a clean hit. I had a good sizable position on it, and this was a very, very simple play, nothing complex. Just got in, and then later got out. Hi, R. Singli, namaste to you. Oh, there's no such thing like namaste to you. Namaste, man. Okay, so with that being said, we can now just get back to our discussion and conclude all the stuff we have discussed about gold before heading over to our next chart of S&P, which will be followed by Nifty and eventually will be followed by BTC chart. So long story short, we are assuming that gold will have a short-term upside, possibly two legs, and some upside should be seen, which can take this market to 2720, 2730, maybe even higher, but at least 2720 is possibly going to be tested, is our assumption. If it's not tested, that's fine as well. Just keep in mind the way the market will proceed. It is suggesting us that two upside or two up legs are remaining, which is more important. And I do not think that dot two is here, by the way. I think dot two may be somewhere here. Here. That will make it easier for us to count as one second. 1, 2, 3, 4, 5. Looks like a diagonal for dot three of, let's say, dot 1 and this will become a dot dot. I really do have to check it at my end later on. Does look like something like this dot dot 2, and then it will go up for dot dot 3, 4, 5. So maybe 3 up legs remaining. I'm not very keen on going in the short term discussion of it right now, right here. It does involve a lot of nuances. And what I'll suggest is do at your own end in your own time. Obviously, you should. Anyways, that was the rough idea. That's the rough outlook and expectation. And one thing I forgot to mention is, given the fact that we are assuming that this is a possible zigzag. Actually, good question, Jeffrey. I should have myself checked it beforehand. Zigzag structure is supposed to move like this, right? So dot A high should be taken out by dot C. So it does look like it's a zigzag so far, at least. And in which case, if it is correct, then it should actually take out the high of 2730. So it becomes a more legitimate target, right? Of course, it can be forming some complex count which we may not have seen right now, or maybe I have it. I'm just not discussing it in this public webinars because complex counts they take a lot of time to discuss. But I can't see that right now. So most likely this is the count which is playing out: A up, B down, and C up, which means this C leg will take out the 2730. So it becomes a more legitimate target, and we have now a higher chance that 2720 will be tested to the upside and 30 will be taken out. Right. I guess I have dwelled too much into gold analysis, and I think that's about it. If you guys have any doubts or questions, you can just type them in the live chat. But I will not take any more time on this chart now, unless I see some questions here. So let's head over to our next chart. Let's check what was being said on the chart of S&P's 500 in our last webinar before we head over to our current chart discussion. So where is S&P? Let's see a little bit more nuanced details of what was discussed. So S&P, I recall the idea was rather simple. We had the main assumption that wave 1 is here, wave 2 is here, and this is now heading up for an upside discussion. Of course, this was done on 27th of December last year. And we were assuming that possibly the 2 is complete as a flat structure, which had a very clear count actually. So A down, B up, C down. And the second idea was that this is the 1 here and the 2 is still continuing, as in the sense that this is the A down, B up, and C down. So basically, long story short, is two ideas were there. One was that the 2 is here. One was that the 2 is possibly continuing and we'll have one more leg down remaining. I was of the view of a little bit more bullish bias. Of course, as you know, the sentiment in index is generally, is as of now generally bearish because of this multiple factors. And I think you may have heard the new news about some another virus. I'm not very concerned about it because I don't seem to have a very strong validity for all those things. And generally, my aim is to read the price and see what the price is telling about the future, not read the news and try to predict it on the price. Of course, that doesn't work anyways. How can you count for hundreds and thousands of news coming out from all different places? So, anyways, as the sum conclusion of all technical analysis is that price takes into account all the news and political events and situations, and hence by reading the price you can at times have the foresight or predict the future, is what we are operating on. And continuing on with that theory, let's now head over to our actual chart of S&P now on screen. So let's see what is happening here and what is really not working out from our last analysis. So anyways, here is the point of reference now. What is this level? Point of reference is around 5703. We are assuming from 5703 that we have one up. Our assumption was 2 was here, or 2 is continuing sideways. Will have leg down is what's played out. I did take some long trades here, which I had to close today again because of this assumption. Now, how is this 2 continuing? We are assuming that this is forming a flat kind of structure. Let's call it circle 1 and circle 2 for the sake of clarity. And basically what we are doing is we are assuming that after the wave 1 got completed here, we have a flat structure in which, as we already know, the wave A low may or may not be taken out. Generally, it is not if the strength is there in the market. In this particular case, it has already been taken out. So that means this market is losing strength. And now that brings us to an important problem. Generally, when the market is interested in going higher, we do not see this kind of movement that the B is propagating too much sideways and C is taking out the wave A low and then the subsequent intermediate lows or interim lows, whatever you will call that. So this whole thing is suggesting to me that perhaps discount is not what is playing out. So I'll get more into that. First, we'll assume that this is our H2, and if this is correct, then we do not want to go longs unless we have a confirmation for this leg up, which actually will be above 6013. So that's a very huge price target, right? Secondly, I'm not liking the strength of this leg to the downside. This is suggesting more like I should look for short trades. We actually had a stock alert going on for PayPal if you were watching it closely around the gold discussion, something I think, and some low was taken, I think. Anyways, I'll have to check it out in my own time. So anyway, this is a kind of not good scenario for the bulls. Any activity for bullishness, I'm not going to be interested as long as the market is below 6013. So only above 6013 plus level, we'll consider the H2 for bullish activity. As far as downsides is concerned, I think we have discussed some bearish sentiment of this chart. Let me see if I have some pulled up right now on screen. I can't see it on here. Let me see on the next chart. Yes, maybe this chart has the alternate view for bearish activity. See what is that? All right. So I have to arrange a few things here. I'll delete this first. This goes there, this goes here, and perhaps we can zoom in a little bit. Delete this, delete that. Yes, and focus on the things that needs to be focused on. That's already done. That's already tested. All right, so here we have the bearish outlook on S&P, which I do want to consider right now and discuss. So we are assuming in this bearish outlook, and it's not super bearish. I'm assuming that this leg down is just an intermediate leg down, and in that sense, we are assuming that circle 4 is complete. Perhaps here, we can take both these levels as circle 4's completion level. Although the targets will vary a little bit if we consider this as the completion level. Let's just focus both scenarios in and then draw the conclusions. So if we take this point of reference here, which is the price level around 5103, then we are of the view that 50-60% retracement this market can go to, and 50-60% retracement is coming around between the price level of 5570 to 5454. Right. That's our first take. We are in this case assuming that we have an A down, we have a B, and then this C leg down can take a lot of down move and can even propagate to 5570 to 5454. That's our let's call H1, and there's a second variation in H1 where we are assuming that the 4 is not complete here, but instead it is here. We have to just consider views. That's all what we do in Elliott Wave analysis. Generally, create multiple counter views, views and then counter views and then views and then counter views, and then based on the guidelines, principles, and some other analysis, we determine which of them is most likely to play out. Second view, I will assume it as H3 because we have already assumed that there is an H2. In H3, we are assuming that this is the point of reference, not this. Price level is roughly around 5386. And from here on, we are assuming that we are seeing a corrective structure. And in which case, we have marked the 50-60 retracement level here. I have not really checked this second H3 view so far, so I'm just giving you as a rough guideline here so that we have all the possible important levels in mind. Nothing more. 5746 to 5658. All right. So in both of our conclusions, we are assuming that the market will at least go within this range, 5746 to 5658, and further continuation is actually expected 5570 to 5454. So we can just say 5450, roughly speaking. 5450 is we are assuming a strong possible downside target. The problem starts actually if the market goes below that level, which will suggest that this was not just wave 1 and wave 2 formation, but actually the end of the fifth here. And that will lead to a exceptionally strong fall in the counter. Uh, I mean, I don't want to give targets or anything, but as such, you can assume that the market will go near 5200, 5240-ish levels. These downside levels, this point of reference will be tested. This range will be incoming for the support to whatever that is, 5330 to 4930. Anyways, we don't have any confirmation or anything for that. So for now, we'll stick with this bearish views. We have discussed two different stories here or different outlooks on this market. And basis on how strong this bearishness is, we expect at least this level to be tested. And actually, I'm expecting the lower level can also be tested. Remains to be seen, but I'll make my plays in accordance. And this is more of a kind of a situation where we can have some very real strong plays on stock specific. That is, if the index is falling 100 points, there will be stocks which are giving more than 100 points, percentage wise speaking, of course. So index is falling 3%, then there will be stocks giving us 7, 8, 9%, 10% as well. Right. So avoid longs for now. Even sectors like what do you call Nvidia was flying high. We even had a long setup there. But given the bearish sentiment in the index, avoid long plays or be really what do you call conservative with them, smaller positions and so on and so forth, because we now have clear warning signs. And you will get more clarity as we go to Nifty. It is showing the same thing. I don't think there is much to discuss here on this chart. We have discussed more or less the complete thing. So with that being said, I think we can now head over to our next chart and take a look at the chart of Nifty 50. And there is a question here. So let's just take the question before we proceed with our next chart. So Jeffrey is asking, let's say we bounce 57.46, what target before you go long? 57.46. So if we bounce around 57.46. So first of all, I don't think it's a range. So I would like to see the market propagate within the range. It's just that I marked the levels for the sake of clarity. And if we do see a bounce from this range, let's just consider this scenario actually for an instance. Then we will assume that this is an ABC kind of structure, flat kind of structure, in which case we will then draw the 0 to B trend line. And then we want the 0 to B trend line to be taken out before we consider any long trades. You know the drill, the trend line gets taken out. We also wait for possible support or test of the trend line, to be more precise. If we do get a test of the trend line, then we are more favoring towards the bullish side. And in this case, given that bearish scenario is so very much clear, we really do want to go through all this nuisance and wait for this take out of the trend line, retest, and then take off. So you get the idea. I think that clarifies your question, Jeffrey. I don't seem to have any other questions, so I'll take that as completion of this discussion. All right, let's now head over to our next chart, the chart of Nifty 50 from our last webinars. We were very clear what's happening there, and it has so far played out. You're welcome, Jeffrey. Where's that text? There's a bit of lag here. All right. So here's the discussion from our last webinar on Nifty 50. What I'm saying is that I'm assuming this market will now head lower, and that has been the main theme for quite some time. Let me see if there's anything else I discussed. I'm discussing some island reversal kind of concept here because we seem to be having a price action which is isolated on the left and the right from buy gaps, and per se that kind of resembles like a isolated abandoned kind of place. I mean, I don't know what the exact candle patterns are called, but I have done a pretty neat picture of it, I can say. You got the idea. Here's the gap starting on the left, here's the gap on the right, and that gives us, ladies and gentlemen, a strong setup, because now it's not just Elliott Wave count and my own understanding of price action, but also some traditional price action analysis, which I am 100% sure lots of algos would have picked up this pattern. So I think we ought to see a move down, and that was the hypothesis. I'm just checking for something else. If we had something else, I guess that's about it. We were just expecting downside movement on Nifty, and lo and behold, you already know what happened afterwards. It did go down rather too strong. Not too strong, actually, we were expecting it. It did go as expected, right? So anyways, now let's head over and check the actual chart. So here's the chart of Nifty on, where is it? Here is the chart of Nifty on screen now. Our last discussion, 27th. Let's see price close of 27th. Where it is? Where it is? Here somewhere. The price was around 23,750, somewhere here, I'm assuming. As you know, the idea was that this market can go lower because we are assuming a WXY correction. X is continuing complete. Whatever the case is, it should head lower. The market has gone lower, although my analysis has a little bit of more complexity involved in it. I'm not sure how much of it I will discuss here in public webinar. I'll try to discuss a little bit in detail here. So guys, pay attention here, because it's not your everyday kind of analysis. We have lots of here layers into it, and I guess I'll just simplify it by saying that we are assuming that this first leg down is like an A, let's say. Although I'm pretty sure we are taking it as a WXY, but for the sake of comparing it with a flat kind of zigzag kind of structure, we are going to be playing out for the C or the continuation of the B. And in both cases, the market is heading downside. In the continuation of the B, the market is heading sideways and then down. If it's in C, then it is straight down, right? So these are the main plays. Now we can assume that this leg is complete here, and this whole thing is just a play for the downside. There's nothing to discuss here. That just suggests that this market will give a lower low, and it will take out the low of wave A, which is currently placed around 23268. So literally nothing to discuss here. Second one is what I was considering as complex. It assumes that this B is propagating sideways, and B or X, whatever you can take. This B, if it's propagating sideways, will have the first leg here. We are assuming the second leg here, and then it will probably extend the range, which is just the kind of thing you expect to deviate normal people. They will think of it as a breakdown, and they will enter shorts on the break of the low, and as soon as they enter shorts, the market will give them some profit, only to wipe it out in few moments later and then go back in the range. Then they will book their losses here, and then the actual down move will start. So kind of a trap which may be playing out here, which is the subject of our discussion now, because I want to discuss this leg. Let's head to, we don't really need a lower time frame. We can just zoom it in. And I have to remove the text saying discussion from last webinar. Anyways, so here is the wave A's completion level, and here is we assuming that this market is heading for a complex kind of structure. Now, I am personally assuming that this is possibly, it will be probably better if I draw it on the right hand side. We are assuming that this is possibly WX Y X and then heading for the Z. I'm talking about a triple zigzag kind of correction. Of course, it can be taken in some other ways. However, as per my analysis and based on the various different rules and guidelines that I have in my own from my own research, it is suggesting that this is a little bit complex. Now, if that is the play, that this is the W, this is the X, this is the Y, and X again. So we are interested in the Z. So Z will have three waves inside of it. That is, if you zoom this, you will get something like this. So it should have an A, a B, and a C. However, the real gist of it is that it should take out the wave Y low. It has already done that. It has also taken the intermediate low, and it is now headed for wave A low. So it has done the bare minimums already. This webinar is kind of late. We tracked all of this in live market, of course, and it was all discussed in our private Slack group. But let's just discuss what we can from here on. We are in the last legs down. So this is the second X, and this is heading for wave Z. So we can assume that this is the wave A of the Z, B of the Z, and the C of the Z is in play. And if we go with that assumption, we can soon find that either we are going to see one more down leg, or if we see sustenance above this trend line. Actually, in this case, not the trend line. In this case, I would like to see sustenance above 23700. Only then we will assume that the B is possibly complete. Now, what I'm coming to right now is the downside possibility is still open. There is no clear idea I have in mind how the C can be considered complete. At least at the bare minimum, we want to see one leg down here, which should take out this low of 23345. I'll just type it here. Even if this market has to go up, this low should be taken out basis of my current analysis, not just the WXYZ I've drawn, but a lot of different things from here and there. I mean, by different things from here, they mean analysis which I cannot and do not share in public or even anywhere unless you are a personal student. So my personal understanding is it should be taken out this low. The problem is at this point, this is not very far away from the recent close. The recent close is 23437. So this is what not even completely 100 points, almost near 100 points, roughly speaking. And the second reason is that even if this market does do as it's expected to do as per our count or analysis, it can just do it in a blink of an eye. It can just go gap down, do it, and be done with this. So basically, we can see a gap down move below 23345, perhaps some follow through to the downside, or maybe not. It will just satisfy the minimum expectation that we have from target and price wise. And that's about it. I don't think there's much point in this. We are quite late in this webinar, actually. If we had conducted the last week one, probably publicly, I could have discussed the entry cases and the continuation of the downside and some stock specific plays as well. We have been able to capture some banking side plays. Specifically, ICICI Bank was exceptionally clear. I remember HDFC Bank surpassed our targets. It was downside. We had targets and everything. It did breach all of them and just kept breaching. But ICICI was at least clearer and catchable, I can say, for the lack of better words. So anyways, guys, if you have doubts or questions on this chart, I would request that you post them in the live chat before we head over to our other charts. And a few points which I want to discuss here. As you can see, the actual chart, I have many other counts. I'm not going to go into much detail with or about them. I'm just going to suggest the downside levels which we have marked so that you can also mark them. We have 22,979. Let's just call it 22,980, followed by other levels 22,888 and 22,658. So these are the important downside levels. If the market continues to the downside, we expect that these levels may get tested on the downside or and I should, as mentioned in the S&P discussion, I should say that this is the kind of situation where we are more interested in stock specific plays, and we can have better chances of catching more downside there. Right. And that's about it for our discussion. Just keep in mind, I'll just conclude this whole thing. We do not want the market to go about 23,670. On the upside, the market should remain below 23. Should remain below 23,670. Only below this, all this setup and stuff will work. And below this, we have these three levels which may play out. And as such, we are not really even interested in that. I just discussed the basic short-term target 23,340 will or should be taken out if at all our count is correct, which does look to be the case, which can be seen by a gap down candle, red candle here, maybe some shadow to the downside or whatever. That's about it for my take on Nifty. I do not want it to get into too much detail. That this will just become way too complex for most viewers. So no questions on the chat. So I believe that the discussion was clear enough for you guys. In that case, let's now head over to our last chart of BTC Bitcoin, which has actually performed exceptionally well since our last discussion. So first of all, let's just load the last discussion on BTC and see what was being said before heading to our current chart. So in the last discussion on BTC, we are assuming that we are heading for a sideways kind of move. I don't know if, yes, we have assumed that. So we were assuming that A down, B up, C down. So we are heading for a zigzag kind of move here, after which we can see a corrective upside movement or perhaps an impulse. Let me see if any further ideas were discussed here. We haven't discussed the detailed idea which actually is playing out right now. That's too bad. I think last webinar discussion, which we missed or skipped, the webinar which you skipped last Friday, could have, oh, there it is. We have discussed it. Anyways, yes. So we have the idea of the triangle. So let's see. We have discussed the modified view where we are assuming that the A leg has one leg down remaining. Why would I not discuss it there? Yeah, there it is. So you can check the whole thing later on. Triangle idea was the main idea, and the modification of that idea is the main theme of this current discussion. And here on the live chart, let's see how things played out. So first of all, we are assuming that this market is possibly propagating inside a triangle from this point of reference, which is the last high on the counter Bitcoin, 108366, a very tall number. Among all the things that I track, this has the highest right side, or what do you call, y-axis. Anyways, so from this point of reference, around 108455 or whatever that is, we have this leg down, which we are assuming as an A. And if this leg down is complete, we will then have a B and so on and so forth for a C, a D, and an E. And that should be how a triangle looks like, roughly speaking, before a takeoff to the upside. That's our general assumption. Keep in mind, this whole thing was being tracked in live market. We were able to capture this up leg, down leg, etc., as they actually performed, as they actually formed, I should say, in the live market. Let's just show you guys here on the right hand side. You can see our posts for the chart of Bitcoin. So around the price level of 101796, we were assuming that this channel will be taken out to the downside, and then it will take out the wave below. So basically go below or around 92,000, right? And the price at this point in time was 101796. As you can see, the market propagate almost near 92,000, and then has indeed touched our target, taken the low, and now we are assuming upside progression as just discussed. So BTC has been playing out literally as our discussion from last webinar and the follow-up from that discussion. There is what you call very clear plays forming on this counter. So now let's look at the current play in time. The current play is we are assuming A down, B up, and C down. Here we can assume that the C is either complete here, or we can have one more leg down for the C. Not really very important because the upside play is only there once we see a break above the channel. Actually, that's the theoretical way of putting it. We personally can capture the upside play once we have confirmation for the wave low, but conservative traders can wait for this. But I don't think there will be much of a profit left to take. Actually, the risk reward will be really bad. That's all. So, anyways, A down, B up, C down. You get the point. We have some target levels marked for C, which should not go below 88,214. It is roughly around that level. Anyways, we assume that it will, if it goes lower, it will just hold above it. As for the upside, as I mentioned, the conservative setup will be to wait for this channel. In this particular case, this channel is far away, so we will like to see the C complete some confirmation, and perhaps basis of that confirmation, we can initiate some long side plays. So that's our intended view for Bitcoin once this wave low is in play. We expect that this market will head higher and perhaps take out the high of 102323, which is this wave B high, or at least test it. So roughly speaking, this is the level which we expect will be taken out once this market starts propagating to the upside. And we are, secondly, more importantly, you should realize that we are in a sideways range. Let me just change the color. So we are in a sideways range is our assumption. So basically, once this leg high is taken out, we can probably extend the range and then fall back within. So watch out for that false breakout kind of plays here. Again, I won't discuss that in too much detail. That's something better left for coming discussions. So BTC, that's it, right? Some very good plays we had. If you were in the group, you were able to catch it. That's good enough. And we did discuss the rough idea in the last webinar as well. So these two legs we were able to capture. Hopefully we'll have some better plays in our next webinar, coming webinar, because again, keep in mind, guys, I cannot decide the time for these webinars. They are almost always done on Fridays, and currently we are doing them at 10 p.m. GMT, 10 p.m. IST, or 4:30 p.m. GMT, and whatever plays we come across at that point in time, we discuss with you guys, right? So thank you for watching till the end. Those who enjoyed the content, do not forget to hit the like button and share. Again, keep in mind, guys, 2025, we expect at least 1,000 plus consistent views, and it is not possible unless you guys do your part. And I'm actually relying on you guys for continuing these webinars. If you do want to see every Friday webinars, do share them and let us have those 1,000 plus views, which we should rightfully have at this point in time. If not, I will also consider cutting down in the coming sessions. Maybe a few webinars less we can do per month, and that also makes sense. Like I have done almost, we are almost near 150, and it has been like what, 3 years of me doing it. So if it's not getting the right results, perhaps it is time to let go of these things, right? With that being said, take care, guys, and have a good 2025. See you in the next one. And yes, Jeffrey, and you're welcome, Muhammad. See you guys in the next webinar. Take care and bye. You're welcome, Luis.